on not just the country, India Inc., but on insurance as an industry as well. We've got Sanjiv Bajaj, Chairman and MD at Bajaj Finserv, joining in on the show right now. Sanjeev, hi, morning. Great to have you on the show. And what a mega move, the GST bazooka by the government, Sanjeev. A step towards long-term revenue buoyancy and greater efficiency in the economy, you think?
Very much so, Aisha. I think this is after the GST starting in 2017. This is probably the single largest big reform that we have seen. And I hope it's the first of many other such reforms for the next 10 years that we hope to see in the coming months from the government. But this has been a very positive one. As we all know now, the GST rate cuts go across sectors, and most sectors end up benefiting significantly, whether you're a consumer, whether you're a urban or rural consumer, whether you're an SME, housing, construction, infrastructure, and all the associated sectors, including, of course, financial services, whether it's insurance, whether lending. So I see this as very significant tailwind that should help drive growth in the coming quarters and years.
Also, Sanjeev, do you really think that, we all know about the demand slowdown, but was this really the need of the hour to try and propel domestic demand?
So we have been seeing at least demand slowdown on urban consumer side for the last 3 or 4 quarters. In the last quarter, we started seeing some improvement over there. And when you really look at where we are as an economy, significant domestic drivers there, the income tax cut at the lower end, right up to 12.75 lakhs done in the budget, banks, NBFCs flush with funds, and our domestic economy has been doing quite well. It was the external situation, and even now some uncertainty still remains on the US trade pact, but it was that was driving moods down, and due to that we saw lower consumption. And it was also the tightening on unsecured credit part of that was initially necessary, but maybe it ran too long in hindsight. Hindsight is always 2020. I think the GST rate cut just provides a whole new boost in confidence, in savings, in higher disposable income, and hence has been very timely.
Sanjeev, donning your economy watcher hat, do you also sense somewhere that perhaps this GST boost can try and mitigate or at least balance out the tariff impact?
These are two different things. I believe the tariff impact due to the US really hurts a few large sectors at this point of time, whether it's fisheries, whether garments, gems, jewelry, footwear maybe. Economic impact of that is not very significant, but there is a human impact. Because these are sectors that employ a large number of people, and the government has already said they would take a look at it. But yes, this should partly alleviate that. More than that, I think it provides a lot more horsepower, not just for the short term, but directionally, because it's not only rate cuts, there's also reform happening within registration. It should allow more people to enter the formal financial system, the GST network, which is a big positive as well. I recently chaired a CI report on competitiveness reforms for India for the next generation of reforms that was released last week. And a number of CI suggestions, we are grateful to the government for including those in these rate cuts, including the streamlining, the inverted duty structure, realigning that. But there is a lot more that is there to be done, and I hope we will see some of that in the coming months.
At your industry level, Sanjeev, just wanted to understand, how do you think the GST rationalization is going to impact health and term insurance now? Now that it's GST-free, how do you think this is going to influence, and will it really bring new policy demand in both health and term insurance?
So, when you look at businesses across Bajaj Finserv, our simple goal has been, can we be the financial life cycle partner to every Indian, from the time they need their loans to asset and health and life protection, and then to help them with their savings and wealth management products, mutual funds. Now, coming first to your point on insurance, on health and life insurance, we are still doing the calculations, the industry is doing that. There is some impact on the loss of input tax credit, but overall there will be a price reduction. How much we will see, we will know in the coming days and weeks. But this ends up directly putting additional money into, firstly, the hands of the consumer that is taking health and life insurance. Secondly, it does make the product cheaper at every level, right? These are not just expensive products. There are products for the masses as well. And that should help in expansion. We also hope that hospitals will chip in, because on a number of items that hospitals buy, GST has been cut to 5%. Hospitals need to chip in as well, so that overall the spread of insurance goes up dramatically. And what we have to look at, whether as businesses or as government, is rather than maximizing the profit we are making on every policy, the more we can expand, because India is such a big market, we will still make a reasonable amount of money, but do it in a manner that is also financially inclusive. In addition, when I look at Bajaj Finance, I look at our Bajaj Housing Finance, the rate cuts should spur additional demand over there, and that should benefit these companies on the consumer lending side, also on the MSME lending side. So we see that as a positive. And finally, this will result in some amount of additional savings in people's pockets. And we have seen in the last 4 or 5 years, particularly just before COVID as well, that a large amount of these savings from the middle class is coming into mutual funds, is coming into other financial assets. And as we start building those out as an industry, as Bajaj Finserv, we get to benefit from that as well, and we get to participate in improving prosperity for every Indian. That's what we are trying to do.
Absolutely. But Sanjeev, do you also think that this move, and I'm going to go back to insurance first, do you think it can also perhaps accelerate some product innovation or pricing shifts in the insurance industry?
Pricing shifts, for sure. It's our responsibility as well, when the rate cut has happened, to ensure that the benefit of that goes to the consumer. There is already a significant amount of innovation that is happening in the sector. But the minute there is a positive momentum, the minute business starts growing more than it was earlier, the next set of products will come about. So when you talk about direct innovation, I can only link it to say that certain products, if it was too expensive for the middle class or the low middle class, if these savings enable us to open it up to our distribution channels to be able to sell, then that's additionally positive. But overall, I see the price cut as being beneficial, and it's also at the same time a responsibility for the industry to make sure that it gets passed on. And we are a price competitive market. We continuously, I know for ourselves it's true, every year we are focusing on cutting costs. So we have to be able to absorb some of the additional costs as well, so that consumers get a good deal. Again, we are not doing charity. It is for long-term, building long-term sustainable and profitable businesses.
Sanjeev, if I were to ask you, where do you think specifically the demand boost will come in? Which lending segments? Because you did mention SMEs, MSMEs, and of course cars and so on and so forth as well. Specifically, where do you think the first beneficiary or benefits would actually trickle in? Which segments?
You know, with the festival season coming up now, Aisha, what we should clearly see is uptick in people buying whether mobile phones, air conditioners, washing machines, televisions. So that's one consumer segment. We should see an uptick again in two-wheelers. Two-wheeler sales have been slow, if you see, the last many months. We should see an uptick over there because there's a clear saving. Same in cars, though I would say at the lower end cars, you will see greater benefit over there. When we look at our MSME customers, there again, this should boost their confidence. And keep in mind that with hopefully positive higher sales going into the festival season, a number of sectors now are pretty close to their capacity utilizations where they need to make the next set of investments. And I'm hoping that we will see the growth in demand, not just in the festival season, but continuing thereafter, which will then spur this next investment cycle, which has been actually waiting for a very long long time. It's just been waiting for the right demand triggers, and hopefully this provides that demand trigger.
Sanjeev, I recall you were one of the first ones to flag off that, there is a concern with regards to unsecured lending. What happens now?
We flagged that nearly 5 or 6 quarters ago. Since then, some of the, I would say, appropriate moves that the RBI took, that portfolio now is back to normal levels, what it was pre-COVID. We also flagged in Bajaj Finance last quarter that we saw some little higher default rates in our MSME business. I think market reacted a little too negatively to that. This was keeping in mind that our own default rates in our MSME business is probably half of the industry. So we saw some higher default, but nothing at this stage to be alarmed about. And what we've at least been very clear across our companies is to provide data to the market and then leave it for the experts there to assess the impact of that.
But do you sense now that with GST tax rationalization, some of that burden could get lifted when it comes to default, at least in SMEs and MSMEs?
There'll be more money in their hands.
Yeah.
So logically it should benefit, but let's wait for the next few quarters and see.
Okay, Sanjeev, great chatting with you, and I hope we speak again soon to get a better sense of where you think the lending business is headed.
Thank you.